Welcome to another S&P 500 analysis. Today is November 21st, 2020. This week, the S&P 500 did not make a new all-time high, but it did make a new all-time closing high. On Monday, Moderna reported its vaccine is 94.5% effective, and that news caused the S&P 500 and the rest of the market to gap up, and also the S&P 500 closed with a new closing high. But unfortunately, this news did not create a sustainable momentum to push the S&P 500 to a new all-time high. Instead, the S&P 500 faded throughout the week and ended the week with a loss. So is this a setup for the next big sell-off? We will analyze the price action of the S&P 500, review the market sentiment and its internals to see if this is a setup for the S&P 500 to sell off in the coming week. Stay tuned. Looking at this weekly chart of the S&P 500, we see the S&P 500 peak above this long-term megaphone channel, but wasn't able to close above it. It closed back inside of this channel. And the range for the week was a little bit under 85 points. And the week it lost, the S&P 500 lost 28 points or 0.8% for the week. And looking at the 10-week moving average and the 40-week moving average, they both are up. And it is still considered to be one-time framing up. So on a weekly basis, the trend is still up. Now, before we analyze the S&P 500 price action in a little bit more detail, let's go and take a look at the market sentiment and the market internal and see what they are telling us is the S&P 500 or the market as a whole is setting up for a sell-off in the coming week. So looking at this sentiment chart here, start looking at first with the VIX. You can see the VIX did not change that much from the prior week. It's still hovering inside of this, what I call the neutral zone, between the 20 and the 30 level. And it closed the week at 23.7. So the market participant is still in a little bit of a cautious mode. And then looking at the put-call ratio, we are not seeing too much of a protection being put on, even though we saw a drop, a fade throughout the week on the S&P 500. The put-call ratio is still sitting somewhere around this 0.5, 0.6 area throughout the week, and it closed the week at 0.56. So until we see the put-call ratio get above this 0.75 and work toward a 1, then the market participant is still relatively bullish but not greedy. So right now, the overall sentiment is the market participant is not fearful, but it is displaying some degree of caution and not getting overly bullish or overly greedy. And looking at some of the market internals, starting off with the up-down volume ratio in the New York Stock Exchange. On Monday, we saw that big gap up and a big update. The up-down volume ratio was a positive 6.5. In other words, there were 6.5 times more up volume than down volume. And then, later on throughout the week, it was kind of, under 2. And then we got negative on the Wednesday when it sold off. The up-down volume ratio was only a modest minus 1.5. In other words, 1.5 times more down volume than up volume. And on Friday, with that fade, it was minus 1.05. So it's pretty much neutral on the up-down volume ratio on Friday. But looking at the AD, the advanced decline, the daily advanced decline on Monday in the New York Stock Exchange, there were 2,138 more advancers than decliner on Monday. So that's pretty strong. And then on Wednesday, that sell-off, there were only 650 more decliner than advancer. So looking at this AD and the up-down volume ratio, certainly there is still some strength inside the market, although we saw the S&P 500 kind of faded throughout the week. And here we are looking at the New York Stock Exchange, new high, new low. And on Monday, we saw more than 198 more new highs than new low in the New York Stock Exchange. And even on those down days throughout the week, as it faded, the S&P 500 faded, the new high, new low, it's pretty much averaging above that 100 level on Wednesday with that big down day, we still saw 161 more new highs than new low. So that's pretty good for a down day such as Wednesday. And even on Friday, on a down Friday there, that was down 0.68% or over 24 points on the S&P. The new high outnumbered the new low by 93. And looking at the cumulative advanced decline line on the New York Stock Exchange, you see that it actually put in a new high, but we're not really that interested in the absolute value of the new high or whatever. But basically what we are interested in is in the divergence and the synchronization of the move in the trend. If the S&P 500 is moving up, we expect to see the advanced decline line also moving up. But you can see right now, we're actually seeing a positive divergence. You see the advanced decline is actually making higher high, while the S&P 500, it closed with a lower high. So that is a strong indication that we could see a higher high coming in the near future for the S&P 500. But right now, we don't know, is it still going to pull back a little bit more before it reverses back up? Or is it just going to reverse and push up to a new high? We'll take a look at that a little bit more detail later on. Now let's take a look at the Nasdaq market and see what the Nasdaq internal is telling us. You see on Monday, Nasdaq got a update, but the up-down volume ratio was not that strong. It's only 2.5 times more up volume than down volume. But on Thursday, it was quite extraordinary. It had 5.7 times more up volume than down volume. The AD, the advanced decline, the daily advanced decline was relatively strong for the Nasdaq on Monday, with 1,569 more advancers than decliners. And on Thursday, there were a little bit over 1,000. But on Wednesday, it only had 772 more decliner than advancer on a down day. And even on Friday, you see on Friday, the Nasdaq closed down 0.66% or 78 point, minus 78 point. But the advancer actually led the decliner by 206. And also there was a positive up-down volume ratio. There was 1.46 times more up volume than down volume. So even though the Nasdaq appeared that it hasn't done anything and seems to be on a negative, a little bit of a negative bias, in the price action, but the internal from the up-down volume and the daily advanced decline seems to be indicating there are more internal strength inside the Nasdaq than what the index is showing. And looking at the Nasdaq new high, new low, that kind of reinforced that internal strength thought here, because on Monday, you see there were 222 more new high than new low. And even on Wednesday, on that down day on Wednesday, there were 218 new high, more new high than new low. So it's pretty much close to that Monday number of 222. And look at on Friday. Friday was 174. On a down day, there were 174 more new high than new low. So definitely, the index, the Nasdaq 100 index is basically being pushed down by some of those large cap stock, large cap tech stock. But if you look at the internal, there are a lot of stocks showing strength to push up the new high, new low, and also the advanced decline. And we are seeing that advanced decline strength in this advanced decline line here, the cumulative advanced decline for the Nasdaq. You see that it is trending higher, right? And also you look at, it's pretty much flatlining on the Nasdaq 100. So similarly to the S&P 500, the advanced decline is showing some strength here, internal strength, that most likely this pullback is basically just that pullback, not necessarily a big sell-off or a correction. And we probably will see some sort of bounce and possibly even come back and test the all-time high. From the sentiment and also the market internal, it clearly showed the market still has some strength to move higher in the near term. But short term, we might see a little bit of a more consolidation and pullback, and I think that would be a positive. So let's go and take a look at the S&P 500 and the other market indexes in a little bit more detail and see what we could expect in the coming week and also in the near term. Looking at this daily chart here of the S&P 500, remember last week we were basically looking for a possibility of a retracement back down into this zone and possibly get down to the 33.89 and bounce off and maybe up to the all-time high. That was the little bit of a downside scenario. Then get a bounce off the 618 at this fill off this gap, and then pushes up to the 36.45. Instead, we basically saw a little bit of a push up and then pull back on that fade. And we could see that this could be a little bit of a bull flag, a bear flag, that it could bring it back down into this retracement zone. So for the coming week, we basically still going to be watching for the price to dip back into this retracement zone. Whether it come down to this 33.89 and fill this gap before we see a bounce, or it's essentially come down to this near the 50% area and then get a bounce back up on the S&P 500. And on the upside, we're essentially looking for a continuation move off of this support here at 35.49 and pushes up. And if we could get back above this all-time high at 36.45.99, then I'd be looking at this 37.20 level, which is the 127 extension of the swing move from the pandemic to the March low, from the February high to the March low. So if you want to see how I came up with this level, go back and watch this video here that I put out in August that's saying 37.22. And drilling down on the S&P 500 using the hourly chart here, this 60-minute chart, you can see that this low channel here is kind of breaking down. So if it get below this 35.49, and I'm expecting it to come down into this retracement zone here and possibly get into this area near the 33.89 and fill this gap here before we see a little bit of a bounce back up. And that's basically what I'm watching for the downside for next week. But if it is continue to push up, let's say we get a bounce at the 35.50 here, and I expect it to get back to the upper edge of this channel and possibly come up and test the high here at 36.45.99. Now let's go and take a look at the other major market indexes. Here's the Nasdaq 100. For the Nasdaq 100, we essentially also was looking for a pullback and possibly get back down to this 11,356 into this gap area and fill this gap on a pullback. Otherwise, we're essentially looking for this thing to bounce off at the 11,846 and pushes up to this 12,200 level and see could it take out this pivot high. Then we'd be watching for a new all-time high, test of the all-time high at the 12,439. So for the coming week, we're essentially still be watching if it could push up to this 12,204, and that essentially is still at the upper range of this balance area that I have, and see would it be able to break out of this balance area and try to work itself up to the 12,439, the all-time high level. But if it breaks below this 11,846, then I'm looking for the possibility to come back down and fill this gap here at the 11,356, and then eventually work itself back down to this bottom of this balance area around 10,677. And looking at the Dow Jones Industrial, the Dow Jones Industrial came up on Monday and closed with a new all-time high and also made a new all-time high. Then again, just like the S&P 500, it faded throughout the week. So right now, we're essentially looking for the Dow Jones Industrial for a pullback. If it's going to pull back, then it basically come back into this area here at this level somewhere around 28,495. So it's around 28,500 area into this retracement zone. And we're going to see would it be able to get a bounce off of this retracement zone. And here's the 618 somewhere down at the 27,600. So we're going to be keeping an eye on the Dow Jones Industrial to see would it be able to break above this 29,551 again and come up and take out this all-time high. and get above the round number 30,000. And if it continue to retrace back down, then we're essentially looking for this particular gap to get filled, and that would be somewhere around that 26,500. And for the Dow Jones Transportation, we saw the Dow Jones Transportation put in a new all-time high, but wasn't able to close at a new all-time high, but it did close at a new all-time closing high on Tuesday. So you can see that right now, if we expect the transportation to pull back, we'll still be looking at this 12,096 as potential support and essentially to fill out this gap. And if it unable to get a bounce off of the 12,096, then we're essentially looking for it to possibly make its way back down to this trend line and maybe at this area here. And this level is somewhere around 11,742. And for the Russell 2000, we saw the Russell 2000 show a lot of strength last week. It put in a new all-time high and also closed at a new all-time closing high up here. And right now, it still shows some strength on Friday. It was the only index from all these indexes that monitor close up. And right now, it is appeared that it still want to get up to this upper channel, which would be somewhere around 1850. So we'll keep an eye on it to see if the Russell 2000 continue with its positive momentum next week and get above the this high here, put in a new all-time high, and get up to this 1850 area. But if we see the Russell 2000 pull back, then the first level that we want to keep an eye on would be this 1742. Then eventually we'll see would it come back into this retracement zone. So between this 1700 and 1630. Okay, so if it come down and get a bounce off of this 50%, which is somewhere around 1660, then we'll probably be looking for another move to get above this all-time high here, up near this 1800. So there you have it. The S&P 500 is pulling back, and it could get a little bit more pullback. I think it will be more positive if it could pull back into this retracement zone down near this 3,500, below the 3,500, between the 34 and 3,500, and get a nice bounce, fill out this gap. Then we don't have to worry about it coming back down to fill this gap on the middle of a run to a new high. Right now, the internals are still showing there are a lot of strength, and also the sentiment is not overly bullish or getting maybe complacent. It is still in a little bit of a cautious mode. So we could see going into the end of the year, we probably will see another new high from the S&P 500, just based on the internal. So good luck, and don't forget to smash that thumbs up for me to help me promote this video on YouTube. Thank you for watching, and stay safe.